and then 5 to 9. So I basically see a trading range today dominated by the news and the financials, with pretty good support in the 10-year at 8 to 12, and we're going to lean against that for support. Pretty good resistance 24 to 28, and we're going to lean against that to get short. And we'll have to keep an eye on the direction of the E-mini and its reaction. And again, good news is actually bad news for both of these markets, because the Fed can raise interest rates sooner rather than later, and bad news is good news. The macroeconomic data since October of 14 has generally come in lower than forecast. Not on every piece of news, but the trend is for weaker numbers. And when you get into the forecasting business, any model that you use is a linear regression model with a fudge factor put in before you publish your final numbers. So in a declining economy, the numbers are always, the estimate is always greater than actual. In an expanding economy, the estimate is always less than actual. And you just have to keep that in mind. They are trapped by the way they forecast the market. They do have their fudge factors, and they all do use it. But generally speaking, our economy has been in decline since October of 2014. And the numbers on whole, on total, usually come in lower than forecast. So we're looking for industrial production to be unchanged this morning. Looking at the 30-year, the knob spread jumped by quite a bit, and it hit the selling in the 30-year compared to the 10-year has been excessive, and so a rebound in the knob spread. It was 33.35 not too long ago. I'm just going back and on the April of 6th, it was at 35.27, almost 36. 34 on April of 15th, 34.5. 35 on April the 20th. 32 on April the 24th. 31 on April the 30th. 29 on May the 5th. All the way down to a low of 25.16 on the 12th. So there's room for the knob spread to expand, is my point. Okay, pretty good selling, 54.08 to 54.16. Well, maybe say you can see this double print up here at 20. So this is where we are. 11 to 15. We'll pick up this area right in here. Might take a 7 to get in, but we're going to start off at 11 to 15. And then 23.27 on the idea that we're going to have a trading range. Got an X period low of 22. We're currently at 54.02. The market doesn't have any trouble trading down. So we'll make 25.21 buy one on the idea that stock market strength might take us a little bit lower. Then 13 to 17 will be buy two. Okay, gold. Ray Dalio came out, and we're seeing it everywhere overnight, and said if you don't have some physical gold, or if you're not thinking about getting some, you should. And you're just seeing more and more people come out of their shells and starting to speak openly about, not directly about all this printing of money and about the central bank, central planning run amok, but people are really becoming concerned. And if you look at the tangibles that are being bought by the extremely wealthy, art, jewelry, prime real estate, fancy condos. $100 million for a condo in New York. $100 million for a personal residence. At any level, it doesn't make sense, except it's a way for the very wealthy to park their money and at least have something tangible to show for it, as opposed to an account statement. And this nervousness that drives everything, the musical chairs games that have been imposed on us by G20, essentially, more and more people are becoming nervous about it, and outwardly so. So I think the support for gold, the emotional support and attachment for gold is there, and the only people that can come in and sell it in size are large institutions, and it's a 1 or 2 day phenomena where people come back in and buy the physical. And I think that'll stay with us. So right now we got resistance at 25. Should have really, really good support at the buck, and we're kind of right in the middle. So our first buy zone is going to be the 10 area plus or minus, and then the 5 area plus or minus. We see support 5 to 10. On the sell side, our 18 to 20 has worked out pretty well for us. And then 24, 26 for sell 2. And we'll see if that plays today. I don't know about you all, but understanding the short side of the market is going to be vital at some point for our economic survival. And you just have to thank your lucky stars every day that you know how to play the short side of the market. And think about all those people out there, should I get out of I'm scared about the economy, should I get out of my stock market and trigger 20% taxes on it? That's a tough decision. And if you don't know how to hedge and button that portfolio up, it'll keep you awake at nights, and we don't have to worry about that. Or not as much. Okay, the euro. Yesterday we left with the euro wanting to sell 14.25s. And I hope some of you in London were able to take advantage of it. There it is, folks. First sell yesterday in the euro when we left was 25. So, where is support? 13.25 is probably reasonable support for buy one. I think we're going lower than 1300. Buy two. It looks like to me, from what I've been able to read, that the can has been kicked to the end of the month of May. For the Greece, on another leg, at least in the Greece talks. And I wouldn't be surprised if into May rolls around and they won't find another way to kick it into June or July. It's the name of the game by politicians, and it's played about as well as it can be played by the population of bureaucrats and politicians that run Europe. And our country too, getting to be that way. So don't take responsibility for anything but success. Never be held accountable. Be able to duck and run and hide. It just goes on and on. But at some point, economic law stops that. And for most of the world, historically, it's not been a pleasant ending. We have time to change that in the United States if we start to change what we're doing, but there probably isn't a hell of a lot of political will to do that. Just imagine a politician picking up the mic up and, I'm going to cut spending in your area. I'm going to decrease government services, yada, 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 yada. That does not go over too well. And that's why they don't talk about it much. I got a hole in my data in crude. It's the only one. I have not been able to rebuild it. It's actually acting like the contract is rolled. And I'll have to check with Chris when that comes up. So we're at 59.62. You got to make 60, 60 and a quarter, sell one. 60.50, 60.75, sell two. On the buy side, 59, 59 and a quarter, buy one. And 58.50, buy two. Okay, Drusy asked a good question. What would make the inverse relationship return? Well, less central bank intervention, Drusky, and I don't know how long we'll take to get there. But, you know, turning the markets loose would be a big help. Both games are centered on interest rates. The financials are supported by low interest rates. They can sell, but they can't sell by a hell of a lot with 0 with a 0.25% interest rate from the Fed setting the floor, the foundation for the entire market. So I don't know what it takes to get back to normal, other than the central banks stopping what they're doing right now. They can't. They have created this monster, and it can run for a long time. Look at how long it's taken to just grind Venezuela into the dirt, Argentina into the dirt for the third or fourth time. Japan, GDP to debt, almost 4 times. Japan's Bank of Japan right now openly buys the stock market to support it and keep it higher. So it can go on for a lot longer than you think it can go on, but eventually it's over. Okay, the overnight session high is just below 23, so I think this market is traded higher. Our bias is to the upside. I mean, you can't fight the tape. So 15 to 17 looks like a pretty good buy. It's fairly aggressive. What takes this market lower today? An industrial production number greater than plus 0.1%. The Empire Index will shake things up a little bit. University of Michigan's consumer sentiment could impact the trading, but not by much. Okay, so the easiest trade to see is failure to extend the overnight sessions range. So this 20 to 20, this 25 area plus or minus is prime sell territory, and it jumps to 29 to 31. But if the news comes in worse than forecast, industrial production unchanged to lower to a negative number, this market will rally, or at least react to the upside, and then whether it can continue to rally or not remains to be seen. But bad news is good news, and good news is bad news. And it's been that way since, probably February pretty strongly this year, but generally since March of 2009. The Fed is the market. Okay, take about 20 minutes to get everything going. I'm going to get busy on that. I will be back with you as soon as possible. We'll comment on the Empire Index and the news as it comes forth, and hopefully we'll be able to